About Association of Indian Management Schools? It's a 34-year-old networking body of B schools in India, having a membership of about 600 top management institutions. AIMS focuses on professionalization of management education, protects interests of B schools, represents management institutions at national and international forums, financially supports members in academic events, funds research projects on management, disseminates management-related knowledge through its annual Management Education Convention, conferences, seminars, roundtables and workshops, organizes free weekly webinars on knowledge sharing and inspiring young leaders sessions for management faculty and students, supports B schools in admissions through Atma, AIMS test for management admissions. Visit https://atmaims.com for more details. Publishes a biannual AIMS Journal of Management. Visit https://aimsjournal.com for more details. Circulates a quarterly e-newsletter on AIMS activities. Conducts workshops on case writing. Encourages AIMS members to be part of decision-making processes as members of chapter management committees and the executive board. Encourages students' participation in free weekly quiz competitions by providing support to interested institutions. Facilitates networking and interaction among B schools. Why would you like to remain a non-member of AIMS? Pay a very low one-time membership fee and enjoy many lifetime benefits. Visit https://aims.org.in for more details.
So welcome to the knowledge sharing session, which is scheduled today with our esteemed guest, Professor Golaka, who had a very active career, both with industry experience as well as academic experience, whom I know for the almost 20 years. When he was working with the industry, starting with NSC, and also subsequently later on to NSDL. And now currently he is a professor and dean of economics. And he had altogether 41 years of combined experience, whom we call now in UGC terminology. He is one of the best adjunct faculty because we had seen him, how he handled our sessions with our MBA Financial Services students at Goa University for almost 10 to 15 years. And he's a very prolific writer, researcher, and a very serious academician. And he had basically a qualification of MA Economics, and he did his MBA, and he's also had qualified in banking examination of CAIB, and then did his doctorate out of his academic interest, and doctorate he did from Goa University. And now, after his exit from NSDL, which was his last industry, he started with various banking institutions like Vijaya Bank and so on. But at the end, his prime career that he closed was with NSDL as senior vice president. He was also vice president in NSC. So we have a glaring example of a personality who has come to share his knowledge in the area of subject what we are talking about, the emergence of financial service sector, which is going to reach to the heights, especially in the context of emerging economies. Because India has already proven for the last 10 years that there is no other parallel country in the world which is considered to be an emerging economy, especially in the context of financial service sector. The so-called initiatives of globalization that have been initiated 2.5 decades back. And now we are in the perfect stage where we can't avoid and we can't even avoid our enemies. And that is the situation when it comes to helping each other and reaching out to each other. So supply side management has taken off a lot of reformations. Where you talk of any sector, doesn't matter, any sector, and most importantly, the financial sector. So this is how we thought that he is a personality who has worked in this area for almost 4 decades plus. And now we would like to listen to his expressive views and interesting views and also reformative views. How this financial sector in India is now going to forge ahead in the years ahead, apart from the history that it has created. So he's going to share you a lot of data because, as I mentioned, he's a researcher. He talks only on the basis of evidence and the data. So therefore, we look forward for our renowned expert, Professor Golaka C. And now with this, I welcome Professor Golaka C. And before I hand over the session, I need to give a few directions to the participants, those who have joined. And please remember that you can interact in terms of your questions at the end of the session. 15 minutes is scattered as part of Q&A, where your questions will be only through chat box. Those who have joined Zoom, you can put in chat box. Even YouTube participant can also put in your questions in that YouTube chat box. So this is the direction that I want to give all the participants. You start putting your questions, and 15 minutes before we close, we start the question and answer session. And it is at that time, once again, I'm reminding all of you, you need to fill the feedback form. And filling feedback form is important for you to get the participation certificate. So please don't forget to fill in the feedback form within that 15 minutes duration. So with this now, I welcome Professor Golaka C on behalf of the AIMS, and thank you for accepting our invitation. Despite your busy schedule, I know how though you are named as a dean of the faculty, but I know how, as a teacher, you are struggling in the classrooms more than an ordinary assistant professor. So maybe because of your charm for teaching, you are undertaking voluntarily this kind of teaching workload in your institution. So I assume that XIM University is very fortunate to have you as a professor in team. Thank you. With this, I now hand our session to you. Over to you, Golaka.
Thank you, Professor Ramesh, for such a beautiful. You have excessively talked about me. Okay, so thank you. I know you know me for so many years. You have a lot of soft corner for me. But yes, we have been in the industry as well as in the academics for quite some time. So let us. I'll share my screen and. We'll talk about today's topic that we are looking at is the financial sector, how it is a catalyst for the development for emerging economies, specifically India, for an economy where we have to provide employment to our new generation. We have to provide sufficient amount of engagement to the people. And the young, specifically one of the greatest young, age dividend that we have received, we can see that. And, slowly, globally, all the economies are aging fast in terms of the demography, where India is not in that particular stage. So we'll see as we go forward. And I have shared my email ID in case we are not able to finish all your questions, or if you want to specifically send me any question that you think that it is relevant for me to answer. I will surely look at your questions. My email I have shared in the chat box. Okay. And we'll start with this particular one. I just start with a particular, statement made by a famous Kofi Annan of United Nations, Secretary General. He said, globalization is a fact of life. Yes, global integration, market integrating with each other, moving. We have studied how the transmission happens from one economy to another. The overflow of data, information, volatility, all kinds of things, the spillovers that, all researchers talk about, spillovers of volatility from one market to another being linked. But he said that I believe we have underestimated its fragility. And he was talking about a long time back, almost 10 years back, he was talking about this. 10, 12 years back, kindly, if you look at almost 25 years back, you talked about, and suddenly we realized how fragile we are after the COVID, thing. Okay, so today the fragility of the liberal international trade system that basically brought peace and prosperity after the Cold War is too evident. Basically how fragile we are. Fragility. I'll just give an example. If you see that globally, inflation has hit most of the countries, specifically developed countries, very hard, and they are seeing this kind of inflation after 42 years. 43 years, they have never seen such kind of inflation. So, and since they follow the textbook, because they have never handled what is inflation, like our Reserve Bank handles inflation day in and day out, every night, every quarter, every month. All the years, our students are, accustomed to hear that particular word, but most of the foreign developed countries, they have not heard this particular term, what is inflation. So, and since they don't have too much of experience, 2 days back, a friend of mine from Federal Reserve US was talking to me. He straight away said that, we do not have much of domain expertise. So we just go back to the textbook and see in textbook it's written, if your inflation increases, increase the interest rate. So we are just going on increasing the interest rate. 450 basis points, the Federal Reserve has 440 basis points they have increased. And globally, if we look at the Bank of England, European Central Bank, all these banks have increased interest rates. So if you increase interest rate, the investment in emerging markets will move to developed economies. So you don't have a choice, but you have to also go on increasing the interest rate, keeping your bandwidth. But we must thank RBI. They have increased the interest rate, but it's only 220 basis points vis-a-vis 450 basis points by Federal Reserve. So we are almost half of that, and still we could manage our economy. Why? Because we have a very strong domestic economy. Why this is so? Because policymakers today viewing globalization as a threat to domestic industries. So we are trying to provide all kinds of security, national security. So, basically the chips, which are basically not available, for your car delivery, it takes time. A lot of things are happening. So what is that? Our reliance on the precarious of global supply chain, after we saw, basically after I talked about the Ukraine-Russia war, and then your COVID, when all the global shipments start, dropping down. And today, almost all the countries around the world are talking about decoupling from China. It is so complicated. They're trying to move their production system. When Apple will be moving about 25% of its production system from China to India. And you can look at, the most important case study, if you want to look at, you see how Korea, once upon a time, billions of dollars of investment they made in China, but successfully they brought the entire amount of production system over a period in time. They have a head start of 15 years in this, vis-a-vis India. If you look at, they completely shift everything to Vietnam. Vietnam today, if you look at the amount of mobile phones they export, you will be mind-boggling. It is something significant, and is a huge amount of contribution come to their GDP. So countries that once championed the case of free trade today are turning into, basically their rivals, secure strategic supplies. We're talking about energy security. We're talking about food security. For computer chip security, rare earth security, everything we talk about. We want to basically ensure that we have everything. So today, the countries who were once championing free trade, they're telling now, no more free trade. We have to reduce. We have to basically try to protect our domestic industry, because in time of threat, like what we saw in COVID, domestic economies are playing more role than the by supply chain from the international industries. People are not getting medicines. A lot of things happen, we see. So why it is so? Because the scale of uncertainty and upheavals during last 3 years is something that present generation has never seen. That today people who are living, they have never seen. What we saw, remotely about 100 years back is the Spanish flu. But that also population was far less. It was handled in a less time. Today, you look at the Ukraine and US-Russia war, it does not get over in 1 month or 2 months' time. Today, wars go for years. And think about the amount of tragedy it brings to the people. And we have seen that today there's a report that in China, almost millions of people are getting affected by another, basically variant of COVID. So unprecedented changes that pandemic brought to the financial world. We'll see how the financial world was affected. And it forced transformation for many countries. Depending how do we basically look at, difficult times, you can find out who is your friend, who is your enemy. You can find out. The country like India has supplied free supplies of vaccines to many African countries, free food to many African countries. Some countries where there is a food supply and a shortage, the government of India saved them. Basically, if you look at the data, when the Sri Lanka was in a dramatically bad state, every week there used to be one ship carrying diesel, another ship carrying food. Products were being shipped to Sri Lankan ports. That time China didn't come to help Sri Lanka, but the Indian government, strategically every week they started shipping, without even the State Bank came out with a different kind of payment mechanism that they did not pay in dollar terms. That payment will be deferred in Indian rupee at a later stage. So first the question is, the policy is to let the country survive, then only we talk about other things. Okay. So it transformed many countries. And today you look at how the bad situation in Pakistan, in Sri Lanka, in Bangladesh, a lot of countries have gone into drastically financial conditions. But yes, it provided pain, but it also provided opportunities. You see how in India, we are actually banking on opportunities out of this. Opportunities means I'm talking about, see the case of China, where people are really looking at decoupling from China. They are moving their production system, some of the production system, in spite of we have very complicated labor rules, we have complicated, industry, we are federal, various states are, tax regimes are different. So all these things still, countries are moving their production to Indian systems. So slowly we are bringing back the entire economy to the normal or the new normal situation. And this particular pandemic rapidly affecting every country. If you look at, almost 90% of the countries were affected, and vis-a-vis our, the Great Depression, and financial sector collapsed as uncertainty loomed large over the global horizon. Meanwhile, the supply of credit is the most important is supply of credit, stopped almost, because people started defaulting, and there was a moratorium. Still, all these things happened, but still, the credit slowly and slowly, the NBFC sector or the banking sector, slowly, the credit supply become choked because people's default started increasing, and you cannot basically go on because you are borrowing other people's money to make loans, and you cannot just be relaxed on this particular loans. So economic stress that is due to underlying economic imbalance, typical, if we see the economic stress always comes from economic imbalances or financial market failures. Okay, financial market failures. I can tell you about the global financial crisis. Okay, financial crisis of 2007, 8, 2007, 8. That's basically market failures. What is the market failure? Market failure means that a particular person is not able to pay the bill, and that is so significant that other people are not able to pay their bill. So financial market fails, the risk management, basically system fails. Imbalance means you have huge borrowers and huge lenders, basically large amount of, economic imbalances. So the amount of money that you are borrowing, you are not in a position to pay. Your balance of payment dramatically changes in such a negative condition. You are not in a conditions to pay. So like Greece, economic imbalance, we can give the example of Greece. And financial market failures, you can look at the global financial crisis, the subprime crisis, all of us are aware about that. So this economic stress, but today's economic stress is basically, or last few years that we are basically coming about, is the public health crisis. So it is because we are not ready for that particular virus. And, we basically face the entire lockdown of the systems, all the markets, everything is basically because we did not have the enough amount of expertise in managing that public health crisis. So this made a unique shock, both supply and demand, because you are not producing, because the laborers are not available. Remember, all those migrant labor started moving away because there was no facility for medical. Most of the time we found the industrial sector, in the people where productions are made, they do not have the enough amount of supply of health care systems. So people were left to die for themselves, people have to pay for themselves. So migrant labor started moving to their rural villages, and the demand of the production system comes to a standstill. Supply, since production was not there, supply chain, medicine supply started coming down, all the supplies started coming down. Okay, so there was a basically crisis from both and global demand and global supply side economy, where both are affecting. So production and consumption was, and GDP, global GDP contracted by 3.5%, in 2020, 3.5%. So India's GDP contracted by 5.8% in the financial year, making it the worst economic achievement for an aspiring, developing country. So recession was highly synchronized globally, that we can see that because it led to a global recession. And 90% of the economies were basically facing this particular issue, vis-a-vis 85% of the countries faced in, Great Depression, right? The government and central banks around the world, Federal Reserve, Central Bank of, London, UK Central Bank, and your Bank of Japan, European Central Bank, okay, all these basically in banks, central banks, and the governments, they responded with unprecedented fiscal and monetary policy measures. Okay, I will show you some amount of data that conventional and unconventional methods of supporting to the individual, business, and financial markets. Deferring your payment to the people who are borrowed against their houses. The government increase the moratorium period for payment of this particular ones. And there are basically cases where the individual supply business got benefits of tax, some amount of help in making the subsidies, some of the subsidies in value of the increased financial market getting support from the central banks, where through liquidity, financial market always wants liquidity, because when the liquidity supply comes down, you see there's a crisis. So this is for massive stimulus packages. Quantitative easing, that we looked about. Quantitative easing means government is basically RBI, central banks balance sheet is increasing when they're providing you more amount of money. Now, other measures to sustain credit flow and economic activity. Why this was necessary? Because finally, when I'm supplying credit, as a government or the central bank is supplying credit to the banking system at cheaper rate, so they can basically unlend that to other market players by taking the amount of risk. So the credit flow does not stop and economic activity continues because these are the two things on which any any kind of emerging market actually depends on. So financial market provides this. The economic activity is out of the credit flows. The objective was, basically why the government and central banks were doing is basically the objective was to ensure recovery of global economy by creating additional demand for goods and services in domestic markets, because the international supply chain was almost defunct, and so that domestically you can increase the demand and supply to sustain specifically countries like India and China as huge domestic markets. So ensure the financial system remains safe in individual countries. As per the IMF estimate of by mid-2021, the global stimulus in response to COVID reached $16 trillion US dollars, including additional government spending. And government spending is basically, you spend, it is basically for kickstarting the economy. Okay, kickstart economic activity. And revenue foregone, because I'm basically, I'm not deferring your taxes, I'm not charging you, giving you benefits. So liquidity measures close to 20% of the global GDP is basically provided. The 16 trillion is basically 20% of the global GDP. To combat the impact of COVID-19 pandemic and to revive economic growth, India announced special economic and comprehensive package of about total 27.1 lakh crores, which is basically 13% of our GDP. Okay, in various forms. RBI liquidity support, lakhs of crores of rupees. In one particular go, RBI pumped about 5 lakh crores of rupees into the liquidity system of the country. Okay, so that banks can start on lending to the needy individuals, needy business. So this measure helped the cushion the economy from adverse effects. In India, this particular one has dramatically paid up. If we see the data present to data, we see that the pragmatic approach that the government took by supporting the system, and we can see that this particular one helped us to save ourselves from adverse effect of pandemic, also demonstrated our commitment to support the economic activity. So it basically brought the faith in the government that in case of problem, government is going to come back. Indian economy started to recover despite the Omicron wave of January 2022. Consequently, output 22 passed, financial year 22 passed its pre-pandemic level of 19, with the Indian economy staging an impressive recovery. And what these particular efforts are basically paying up, GDP growth has beaten all the estimates. Today, if you look at 6.1% in the last quarter, which has beaten the 5.8%, expected. So it has beaten actually the estimates of everybody. And GST collection for the last consecutive 3 months is exceeding 1,50,000 crores. So that's basically showing the increased activity where if you look at the China today, it's going to have a severe, debt crisis. It's likely to have a severe debt crisis. Okay. And, the situation in China, the factory production has come down dramatically. Most of the factories are closing down, large amount of, because the demand from Europe is drying up, demand from the US is drying up. People are trying to move their particular, support to other countries. So just as in India, the world were expecting recovery from pandemic, now the geopolitical upheaval in Europe, which is basically your, Ukraine and US war, US and Russia war, is basically the problem that is started. It is geopolitical activity. It is specifically disrupting the commodities markets. Okay, specifically we'll see that particular how it is this particular after pandemic, when the countries were slowly recovering. Okay, and all they got basically bad one from the Europe, which is basically the Europe the war between Ukraine and Russia. Only thing is, in this particular case, India is the biggest, India is the biggest beneficiary. Okay, due to the low oil prices, okay, from Russia. And you know, the India is the third largest refinery system in the world, and they are building up, another, they are also almost doubling in few years' time. They are doubling the capacity of this refinery, and it is, I think India is one of the largest exporter of refined, fuel to the other countries. It is buying from Russia, it's sending to to European countries, to many other countries. So we became the biggest beneficiary of this particular one, and thanks to this, our interest rate did not increase, our inflation did not increase, because oil is a major contributor for your inflation in India for last so many years. So we survived because of this particular one, and that's why the RBI had the RBI has the benefit of not increasing the interest rate the way the Federal Reserve and other central banks increase the interest rate. So this turmoil led to price volatility in fuel, food grains, fertilizers, natural gas, especially wheat prices globally increased because Ukraine is one of the largest supplier of wheat. And fertilizers, natural gas, metal prices leading to, because this is why the shipping cost increased almost 3 times. Okay, shipping cost increased almost 3 times. The impact on commodities market can be gauged from the fact that the year-on-year growth in prices as of March 22 was 400% of natural gas, 250% for coal, 76% for crude, 30% for food, approximately 120% for fertilizer. And these increased prices led to multi-decade high inflation in many advanced countries that I was talking about. Inflation reached 10% in Euro area, Germany and UK. In India, inflation rates reached 7.8% in 2022, before easing to 5.7% in December 2022 and 5.8% in March 2023. So comparatively, it is mainly, the fuel prices impact was less, and food, because of the food security, food inflation was less, so primary goods prices, so because of that we could bring down, but the other European countries and America, they have not been able to be, basically bring down that inflation dramatically. So central bank across the world, led by Federal Reserve, responded with synchronized policy rate hikes to curb inflation. And all these things are actually led to, as I told you, the fragility. Because from one economy, it is flowing to another economy. So since May 2022, US has hiked their policy rate by 450 basis points, UK and Europe by 300 basis points, India hiked 225, mainly to keep the rate low to support the economic activity. Okay, so because the interest rate is coming is one factor that actually affects the financial market dramatically. If your interest rate is high, your financial market cannot support because the borrowing cost of your production is too high. So automatically what happens, this particular one builds down into your demand comes down when the price increases, your demand comes down. So the companies suffer, so the stock market suffers, the financial market suffers. So because of that, the government took a particular stand of reducing interest, to some extent to keeping it much below compared to the US market, thanks to our low inflation rate and the food prices that has actually not seen dramatic increase. So this makes India the fastest growing economy in the world. Today, we are referred to as a bright spot on the dark horizon. So recent development, what are the basic developments that, to make the financial system safe, what are the developments that are actually taken place? Few developments have taken place. First noteworthy development is increasing use of technology in finance. This particular one has, dramatically changed our, support system. Everybody can deal in finance. Everybody can deal in this one using your mobile phone. Right? Today, you think about your payment, you think about your receiving things, your money, everything you can do. You can order your goods, you can basically do anything using, your technology. so use of technology in that you were talking about the fintech. Okay, so fintech companies and the partnership between fintech companies and banks, that has actually, this particular development has improved the financial product delivery to the at the cheapest possible rate. Today, if you go and see that the insurance you can buy from particular websites, you can buy even the loans from a particular website. You have a lot of these particular ones are basically the consumers to consumer. There are various portals where you can basically get all those things. So this is basically possible because of the fintech companies tied up with the banking system. This is another development that is in the financial system that has actually helped us to why we are talking about this as a basically our financial system. If we can keep our financial system safe, it will automatically produce jobs for our next generation. It will, people will have faith in the financial system. The creditors will have faith in the financial system. The debtors will have faith in the financial system. The regulators will have faith in the financial system. Everybody, the researchers will have faith in the financial system for producing quality data. Because in a fragile system, your data is all fragile. Data is bad. You cannot really, do much of good quality research if this one data is fragile. The third important development that we have seen is the inclusiveness. Simple thing that example is your Jan Dhan accounts. Everybody is basically having an account, and if you go and see the RBI website, lakhs of crores of rupees is put in this particular simple Jan Dhan accounts. Okay, people are today, thanks to this Jan Dhan accounts, one particular thing that has dramatically changed is your UPI, the BHIM payment systems. UPI payment systems are dramatically changed. Okay, everybody uses it today. Sometimes we talk about, basically in kind of jokes. When you go to a shop, that guy asks you, Modi mein dega kya Gandhi mein dega? Gandhi means note, Modi means your UPI. So they talk like that. So it's basically become a part of life. This UPI payment has become a part of our life today. And that has actually increased this inclusiveness that everybody should be part of your financial system. According to its capability, you must take the basically express interest in financial. When you're converting cash into financial products, this particular technology transformation, previously they used to hold. Everybody feels comfortable in taking your UPI payments. Reserve Bank has accelerated its efforts towards building an inclusive financial system where access to financial services is not basic bank account, but everyone access to formal channels of credit. They're able to use their banking account to make digital payments to everybody, everywhere, every time. If you look at some of you, maybe having, including me, I have a, basically that central bank digital currency. Okay. So you can have a wallet in the central bank itself. So the bank has facilitated me to have my money in the Reserve Bank of India. I cannot open an account, but I can have a wallet which will basically manage. It's called central bank digital currency. Okay. So instead of putting in my money in Paytm, I hold it in RBI in a basically wallet. So that particular thing has already started. Experimentation is going on in most of the cities, and people have started using that particular one very significantly. Okay, so this is basically the we are this inclusiveness means we are allowing everybody to be part of the financial system. Think about the growth in demand, the growth of technology demand. The growth, basically everybody becomes part of this particular technology. The amount of data that you are basically producing, why data analytics has become today a most important thing in the world today, because the amount of data that you are producing need to be analyzed and need to be basically, the banks have to basically go on constantly, or the financial system or the financial market constantly looks at this particular data to understand the behavior of the consumers. Finally, we are talking about consumers and consumers' behavior. We have to study to understand what kind of products I will basically look at. Think about if you go and do your mobile phone, your laptop, you think about that. The advertisements that come to you is something which is linked to your last, either you have basically purchased a particular thing, or you are basically thinking about buying a thing, you have made some searches about that particular one. So the system is automatically identifying you through the use of artificial intelligence, and it is basically trying to put you those particular goods into, basically into your, your advertisement portal, where you can see them and you can take a decision of whether they're trying to basically, manage your behavior towards reaction to those particular products. Okay, so machine learning, artificial intelligence has become, but there are other negative channels are there, but still they are basically good technology development. And this technology has helped us to produce and goods, supply them at lower possible price to more consumers. UPI, almost it is free, zero price, right? The government has burned all the cost, but finally it is benefited the society. It has huge externalities. If you look at it, has huge externalities, and it has actually revolutionized the entire system. Think about people who are developing these APIs, people who are producing products which is linked to these particular payment systems. Easily you can look at that. So India's payment system are among the best in the world, and our real-time fast retail payment, that UPI, okay, enabling transaction about 12 lakh crores per month in value, and almost 26 crores transaction in daily volume. This data is little dated. It's about three months old data. Recent data I was trying to search, but I was not getting confirmed sources like RBI or Finance Ministry. I was not getting, so that's why I have not put it. This data is RBI data, about few months old. So this must have dramatically increased. A port development is to keep the financial stability as the prime point of focus, because without this you cannot progress further. This is one thing, okay, that the financial stability, because if my financial system is not stable, I cannot have basically a good economy. I cannot have a good system at all. So financial stability is the major focus for the central banks, for the government, because finally the financial stability brings jobs, tax, goods and services, new products, all kind of things that we can think about. There are a lot of things, innovations, right? So innovations, a lot of things that we can basically look at, cost brought down. So a lot of all these things, financial stability. Remember, stability means you have low standard deviation. When your standard deviation is risk, when standard deviation is high, your capital cost increases, because if a particular person's income is not stable, you may not be able to give him loan, or if you want to give him loan, you will be charging high interest rates because his financial stability is in doubt. So same thing, the cost will be brought down. When your stability is high, the cost will be brought down. Another, basically emerging area of focus is making finance available for transitioning to a low carbon economy. Okay, so that's basically another financial markets. Everywhere we talk about the ESG finance. Okay, so environmental and sustainability. Yes, sustainable development. Everywhere you talk about, in the finance is basically moving towards the ESG finance. Slowly and slowly we are planning to move to the zero carbon transmission society. As we move forward, this is also an endeavor financial market, because if an emerging market has to sustain, this financial system has to provide him, and the financial system has to tag with the low carbon economy. All of us are now cognizant of the global challenge that climate change poses to our planet. And if you look at how the global temperature worldwide, the temperature has increased, you can look at how hot it has become in India nowadays. Just 1 minute, sorry. Done. Our aspirations on May 1st, 2023, the Ministry of Civil Aviation tweeted that all-time high of 4,56,082 passengers travel domestically on a particular date, 30th of April. So this was offered by many as a evidence of Indian economy is basically doing well, because movement of people and people preferring to air travel. This is also, and some of the data chart that I want to show you how we are basically moving towards. You can see that investment in GDP as they show how it is slowly and slowly. It is how fragile it was. From 2007-8 when the financial crisis was the highest, and slowly it came down. Slowly now it is, after this one it is picking up. The data, private sector household investment to GDP ratio in India, it is also slowly stabilizing and picking about, slightly more than 10% is going on. Value and number of investment projects in India, you can see how it is actually growing slowly and slowly it is increasing. Foreign direct investment as a percent of GDP, that also slowly is picking up. You can see that it hit in 2007-8, but now it is, basically slowly and slowly coming up. Gross tax revenue as percentage of GDP also, which was basically in 2008, we were 12.11, but slowly it came down, but slowly you can see that it's more than 11%, which is a very, very important, part that we can speak about. So, that means all the data, all this, that basically looking at everything, that we can see that we are, slowly and slowly it has been possible because of the financial stability. Because financial markets always look at the stability of the entire system, economy as a whole, and then only the growth of financial markets. Basically today, if you look at our global financial market, one of the best market that we have, Indian equity market, Indian basically the derivatives market, Indian the currency market, currency futures market. If you look at today, it is one of the best systems that we can think about. Even the interest rate market, the bond market, one of the best systems. The last few years, the kind of revolution that has taken in the financial markets is quite, sometimes you cannot basically look at this kind of things are not available in any of the countries. Okay, so we are into, that's what basically we said financial market is the catalyst of our, basically for an economy, for development. As you can see, slowly and slowly the data is showing what is possible because the financial stability we could achieve due to the policy of the government and the central banks and all the policy makers thinking that particular direction, that has actually helped us to sustain this particular system. So I think we are supposed to take 15 minutes. We are supposed to leave for the discussion.
Now,
I'm just
time for you
exactly in
to
time. Okay, so exactly in time, and yeah.
It's fine. Thank you, Professor Golaka, for your elegant presentation on the financial sector. And this is a refreshing memory of your presentation after a long time. Though we met last few months back in Nagarjuna University in the similar kind of conference where I heard of the similar thing from you. And you have been master in terms of the financial sector, and it is not the question of saying, but then you get into the roots of every aspect of the policy issues, whether it is a question of interest rates or whether it is a question of financial policies or international debt policies, international investment policies, or foreign direct investments. And I really appreciate your efforts. And Professor Golaka has... hello?
Yeah, yes.
Yeah, Professor Golaka has elaborated on various aspects of financial sector reforms in India, starting with the globalization, where we took a turn towards globalization of Indian economy, from where we never turned back. And it is, if at all, if there's a country in the world that is forging ahead in terms of implementing the reforms in terms of globalization of various sectors in the country, it is India. And despite the fact that most of the countries which are facing a lot of economic crisis, we had seen three economic crises, financial crisis world over. And during all the financial crises, the Indian economy was least affected. So Professor Golak, what he was talking and harping on the point is financial stability. And this is the point that to prove that India has faced three financial global crises and still not affected. Even now, with the kind of corona effect that has come, and for 2 years, all activities have come to naught. But yet, the Indian economy, though it has suffered, but the loss of economic loss of the products or services is much lower than what the other countries in the world have faced. So this speaks of the inner strength of the Indian economy, which is based on the fundamental strength of the country. So we always believe the fundamental strength is more important for any economy to grow. We have that. Added to the fundamental strength of the economy and visionary policies, future outlook-based policies, economic policies or financial policies would drive the growth of the economy. I think so far, whatever we have witnessed, we have never looked back, and India is forging ahead. And perhaps this is the reason why, though at the moment India is in the fourth position in terms of the biggest economies in the world, but sooner or later India is going to reach to the pinnacle in terms of its position. Looking at the struggle, what the so-called advanced economies like US is facing, and you know what is happening to the dollar value. First time, the US economy is trying to issue the bonds, and that itself is acceptance of this some kind of fault in the economy, which we never saw in India, despite all the kinds of obstacles. So this is the big news for the world, for the so-called US economy. They are issuing the bond for raising the government loans, which is very surprising to the whole world economy. Whatever may be the factors that have contributed to that. But nevertheless, the war that has erupted has really affected the European economy and the NATO countries, but not the India. And that's where India stands as a very strategic partner and the true non-aligned country, wherein we are in good friends with US, good friends with Moscow, and good friends with even Ukraine. And Professor Golaknath has said that we have received a very concessional rate in terms of import of the crude oil, which we really derive the greatest advantage in terms of the fuel prices import, cutting down the cost of fuel, whereas the other countries' fuel cost is increasing, whereas Indian import fuel cost was decreasing during this war period. Though they did not, this did not result into the passing of the benefit to the consumer. So that is a different question, which takes a lot of discussion on that. And what Professor Golaknath has also stressed is in terms of inclusiveness, especially financial sector, and the impact of financial technology on the common man. I think these are the two driving forces that what we have witnessed post-COVID period, which has a tremendous impact in terms of the cost effectiveness of your services and also the convenience. Though we had some kind of hiccups in terms of what we may call as the frauds, but on the whole, the technology has really helped the Indian common man in terms of ease, inclusiveness of participation. Because at one point of time, we used to talk how many Indian people, especially in the rural area, have the bank accounts. Today, we don't talk about the bank accounts. We talk about how people are using their mobile phone for their financial transaction. And that speaks about the inclusiveness of financial literacy. So it's a great achievement, and I think it is only a question of a few more things that have to come in line for stability of the economy, which we'll have to see ahead in the next 2 to 3 years. But at the same time, there are Professor Golak, there are a few questions from my side before we open up for the participants. The first question that I'm trying to, not question or clarification perhaps, is that despite our strength in terms of financial reserves, international foreign exchange reserves, though we have not lost, but we are growing in terms of large foreign exchange reserves. And also we stand in good stead in terms of international comparability of the economies. But yet we fail to understand what is driving down the Indian currency against US dollar, especially when the US dollar itself is struggling to maintain its value. And this is one of the biggest questions that we don't find answers. Can you please elaborate before I ask?
First of all, US dollar is a reserve currency of the world. So you have an unwritten guarantee whether even if it has zero value, people have to keep their money in US dollars. So automatically it creates a demand, which is, there is a base price. Always if you go to an auction, there is always that fellow says, if you want to participate, minimum amount is this. So that way it is basically written there. Think about our Indian currency. Why we lost, some time back before this Russian crude and all these things came. India, when the interest rate was increasing, India almost, we lost about close to, if you look at that foreign exchange reserves came down dramatically over a period in time. Substantial amount of these reserves came down because of the, to protect the currency. The Reserve Bank has to sell those dollars basically to protect the currency. Almost we lost close to 100 billion. You can say that. We have, closed almost, I'll start my video. Okay. Right. Almost we have to spend a substantial amount of, if you look at the India's, the RBI's rupee sell, rupee buying and dollar selling, quite significant at some point in time about, maybe about slowly about 1 year or 10 months back, if you see the data. So because of that particular reason, and the currency basically crashed because it was 65 to 70, and suddenly within a few days' time it came to 82, and we are sustained at 82 thanks to the fuel prices. Because that particular point in time we had no source. Our fuel price was one of the highest when the prices of energy increased before Russia offered that particular one. We had only one source from Iran, which could basically on supply basis. It was basically low price kind of thing because of the even sanction against against Iran, where they can sell against food prices and all. So because of that is the only source. But now Russia has opened up. Suddenly it has become, what has happened? Our currency becomes sustainable and become, it reached that 82 level and is remaining at that particular level for a very long time. So during this particular year, the volatility of rupee has dramatically come down because so we are more about sustainability. And it is because slowly and slowly the RBI started buying those reserves. So it's not substantially what we lost. But you can always see the difference between our reserves and the total external borrowings that the country has. If you look at the difference used to be about $15 to $20 billion. but it went to more than $65 billion, the difference between. That means you have more borrowings than the reserve. That means you are actually not able to pay. If everybody demands that money, everybody, you will not be able to pay. And you are a chartered accountant, basically what happens when a person does not have money. He has to basically borrow. He has eaten more than what he can basically pay. So only thing is that the probability of few people will be able to pay it. So automatically there's a chance on on a pressure on your currency when you face this kind of situation. So thanks to this particular Russian oil and oil baskets and come down, our currency started receiving that particular stability. Our inflation, is already, it's a basically purchasing power parity theory and interest rate parity theory to which all these things comes. So because of that particular one, domestically we could handle this. Otherwise, for a country like India, our heavy dependence on oil actually pushes our currency into bad sides.
Yeah, I just want to add one point. Do you foresee the downfall of US dollar and the strengthening of the Indian rupee in the near future?
I don't think, because that is not good for us. In the sense, because if our currency strengthens, if we appreciate, it is not good for, remember, our imports are far higher than our exports. But whatever exports are there, that is basically is used for repayment of our loans, and so many things are there. So if we actually allow our currency to appreciate significantly by buying dollars and allowing this particular currency to appreciate, we'll be actually beating ourselves with our own stick, because it will reduce our export proceeds, it will reduce, and our ability to pay back our loan will come down. So even there is a particular policy in which we should not allow any appreciation of Indian rupee. We don't want to show our currency. We should have a stable, because finally RBI does not look at the absolute values. They look at the real effective exchange rate. So real effective exchange rate is how against a basket of currency, how my currency actually moves. This is most important thing. And the US dollar is a completely different ballgame, because they are the reserve currency of the world. You cannot really compete with them. So you should not put that as a benchmark kind of things. For me, real effective exchange rate is the most important parameter to see how my currency is behaving against my trading 20 top or 30 top trading partners. That's basically.
I'm asking this specific question as an economist. In the long term, I'm not talking in the short term.
Yeah.
Whatever answer you have given is in the short term. But in the long term, with the Make in India campaign that has been going on, and then less reliance in terms of import. And there are so many sectors, especially defense sector, which we used to depend on foreign companies. Now that dependence is coming down. And now over a period of time, what you have said that our exports are important. Imports are also dominating our exports. But now with the reduction of the imports, with the self-reliance Indian economy, Make in India campaign, what would you like to foresee in the near future?
If we can improve our export dramatically, our currency will be just like Chinese currency. Everybody will scared of our currency. Our currency will be appreciating. That will always happen, because we'll be basically, if we have a China can really play a hard game, because they know that other countries don't have a choice. Okay, so once we come to that particular situation, yes, but being a democratic country, we may not have that kind of choice possibly. But yes, that's a possibility, but very low possibility of that. No government would like to do that. Actually.
Okay, thank you. So I assume that the participants were really enjoyed the session. So let me now acknowledge my thanks to Professor Golaka, who readily accepted the invitation. And despite his schedule, as I mentioned earlier, though he's a dean, but then he works like assistant professor, engaging in so many lectures, engaging in various research activities and other developmental activities of the JV Institute of Management University, XIM University, Bhubaneswar. So thank you very much, Professor Golaka.
There's a question has come. So there's a question.
Okay, please.
I will answer that. Dr. Neelu Jain has asked, as now our GDP is continuously increasing, is it there the inflation decrease in future? Two things. Increase in GDP, it actually brings more wealth to the country, which can be spent for the poor people. So increase in GDP, you can actually uplift your people from poverty. An example is Malaysia. Malaysia is only one country in last so many years that it has brought a major part of their population above poverty line. I think beyond Malaysia, nobody has. Singapore is a different case altogether, but beyond Malaysia, you have not seen a single country in last, you can say, 100 years, which has actually brought its people above the poverty line. So large millions of people above the poverty line. So inflation is different. Inflation, your GDP can increase. If your nominal GDP can increase, but your real GDP can fall because your inflation can be, very high, right? So inflation, decrease inflation and increase inflation, inflation increase or decrease will depend on basically how, because a particular part of inflation is fueled from the global market through your oil prices, your, everything. If the oil price increase, it goes into all your production systems. Okay. But remember, inflation management comes under the purview of a settlement between Government of India and RBI. Under no circumstances, your inflation will be, because it has to be managed, 2% above 4%, 4 plus, 2 or plus minus 2 is basically the interest rate, the inflation rate with the RBI has to manage. Because RBI will be able to ensure that you have a stable inflation depending on your GDP, or depending on economic activity. So I don't see inflation is a big case for India as such. Okay. And another question here, what is the strategy behind withdrawal of 2000 notes? I do not know because it does not come under my purview at all. I do have no idea absolutely, but it is actually something. If you look at how many, personally, you tell me, for last how many days you are having a 2000 rupee note. Any common consumer has seen, at least I have not seen for last 1 year.
Okay. Same is the case with me.
So that means if people have not seen that particular note, so whether I withdraw or not, it does not make it, because RBI has already stopped issuing that note, and in place of that, they have issued equivalent amount of whatever note has been stopped. It has equivalent amount of 500 and 100 has been issued. Okay, so notes which are not under circulation, they are basically giving a chance that you come and basically exchange this particular notes, right? So since it is not with public, right, there is no economic case for protesting or appreciating, because finally when people are not having any 2000 rupee note, why should we bother and waste our time of spending energy in
Professor Golaka, there was a discussion 1 year back that the government is going to withdraw 2000 rupees note.
Yes.
And RBI has made very clear we are not at all considering withdrawing 2000 rupee note.
Yeah.
And that was the statement which came from the present RBI governor.
Yeah.
And now today they have done it. So therefore the question comes in the minds of the people, why it is done. Whether you have seen or not, that is a different issue.
Yes.
But what was the issue?
That's I understand that. So they are giving a lot of explanations for this. So, but what has actually, there are many reasons also. The supply of the paper and a lot of issues that have come up. There are the duplicate notes are so huge. Basically. At times you will see, you will not be able to differentiate between a duplicate note and a original note. And many times you will not be able to do that. Okay. So, but the government has its own reason. I don't know what exactly is the reason, but it is not so that even if I withdraw, see, I think an elected government must have the prerogative to decide what it wants to do. because finally I have given my vote. If it turns out to be a rogue government, next time we are not going to give him a vote. But government should be allowed, if they think they have a policy of basically managing, I think we should give them the credit. Okay, fine, but as long as it's not really affecting me, or affecting the general public, we should allow that particular one to happen. That's basically my personal choice. Is basically, yeah.
Okay, thank you very much, Professor Nath, for your elucidative explanation to the questions and your presentation. And we are really delighted to hear you today. And this is the first time I brought you onto AIMS platform, and this is only the beginning. We look forward for your creative presentations on various aspects in the especially financial sector in future as well. Yeah. And now let me extend thanks to our president of AIMS, Professor Nandagopal, who has created this platform on weekly basis of sharing knowledge session from various experts like Golaka, which we have been doing it for the last almost 6 to 7 months. And all these presentations have been very illustrative as well as knowledge sharing sessions. And the entire team of AIMS, especially the AIMS board members, and also the Secretariat of AIMS, especially Sunil, Dr. Sunil, who has created this Zoom platform for all of us to join, and the background desktop people like Priya, who has facilitated this program, who has been contacting the resource persons as well as the coordinators. So I finally thank all the other participants who have joined today's program, and I look forward for your continuous support in future. And I take one last call of reminding to all of you that we have extended the date for receiving your concept paper for various competitions at the annual convention of AIMS, which is scheduled in the month of August. We extended the date till 20th of June. So I request all the participants to once again look into the details on the AIMS website or on the other platforms and try to participate in maximum number, competing for various competitions, the best research paper award, student best paper, and best case study paper, and best convention research paper, and so on. And also participate in large number of the annual convention going to be held in Coimbatore. PhD hosted by PhD Institute, Coimbatore, in August. So thank you once again to all of you. And signing off, Professor Ramesh, AIMS board member. Thank you all.
Thank you so much.